Fios is not cable. We're wired differently, which means you can get the fastest internet available with equal upload and download speeds from 50 to 500 megs. So you can upload 200 photos before your favorite song is finished. Click the ad and switch to Fios today to get our best offer ever.
This is a download from BFM 89.9, the business station.
Good morning, Dodge. Earnings seasons are here for the third quarter. Banks are showing good results even when interest rates are ultra low. Some banks, including Bank of America, registered higher but better expected results than forecasted. JP Morgan, Citigroup also lower but still clearly better than expected results. Is this a signal that banks are going to be better off for the fourth quarter earnings going forward?
Well, good morning, Abraham. Yes, all five of our large banks have beaten what was supposed to be the estimates, but despite the beats, Abraham, if you take a look at the activity, J.P. Morgan failed to close in the red and the green on Friday. Same thing with the other banks; they've failed to break out of either downtrends or sideways patterns. Fourth quarter earnings will be different in light of the rising federal interest rates. That's for sure. There is an increasing certainty about bank earnings when they become more involved with higher interest rates. It gives them an opportunity to go back to some of their more traditional sources of profits. The other thing that's going to happen is in the area of trading. Now, you've seen trading has picked up and has become, again, another profit center for the banks. Trading will become easier with the move towards a more fundamental, traditional, natural background and the environment of higher interest rates. It'll be easier to have trading profits. Profits will come from buying breakouts and selling breakdowns rather than what's happening now where most of the traders have to go against the trend, so they're selling the rallies and they're buying the pullbacks. That's very hard to do. It's much harder from a trading point of view than the type of trading that goes on when you have a more natural background of rising interest rates. So, yes, there will be different, and I think the potential will be for further increases.
In light with the strengthening of the US dollar, do you think that this trading is going to be more difficult than it already is?
It will be more difficult, but the type of difficulty will be more easier to understand from a pure trading point of view. I'm not sure. It's hard to explain to non-traders, but it is easier when you have a fundamental background where you can say if a stock breaks out, you can buy it and it will have some follow-through. What's happening now is there is no follow-through. Traders tend to take it out of the trading range, and then they get it out and they attract some people to buy, and then they just take it back down. That's going to change when the economic environment becomes more certain and when interest rates start to rise again and are much more natural in their progress rather than being held down by regulation.
Still on earnings season, do you think that the overall profit picture for American businesses or American incorporated, should we say, could expect to stabilize at least in this quarter?
Well, I think they will stabilize in that they will not decline as much as they have been. The decline will be less sharp, and the reaction to earnings announcement will be more positive because the perception of the future is becoming clearer. Obviously, we have the election, and it'll become clear as to within the first week of November, we'll know more about what the regulatory and political environment is going to be here. And I think the fact that there's more certainty, I think that the reaction to S&P earnings will be more positive, and also retail sector will become more involved with purchases, et cetera. So yes, I do think that once we get some of the short-term uncertainty out of our view, I do think that it will become more positive.
Dodge earnings per share for the S&P 500 index are expected to be down by 2% year on year, and this decline is more sharp than what we've seen for the past 2 years. Are you optimistic that this trend will buckle, or will the index continue to be dragged by global economic events?
I am not positive about it. I think earnings will continue to be dragged down. I do not see a change in that perception until we get into the new year, but we have a couple of months to get through, and some pretty big political decisions have to be made, economic, global decisions have to be worked through. So I suspect that And also, Abraham, the reaction to earnings that come out will be much more violent relative to what we've had in the past. And because there'll be a greater volatility, it won't last as long as it has. But yes, I think we have to get through this, and I do not see this environment changing until we get to the new year.
Now, if we strip through some of the sectors, much of them are registering positive growth, including utilities, consumer, healthcare. They're all in the positive in terms of S&P 500 earnings per share by sector. But one sector that is an exception is the energy sector, where it's down at 72.5% change year on year. Do you think profits will find the bottom for energy firms?
Well, there are two parts to it. Yes, I do think they'll find the bottom, but also I do not see a tremendous increase. I see more of a stabilization before we start to work our way up. Energy companies are now trading much more like the underlying commodity than they have in the past, where there's been more fundamental reasons for purchases in addition to the price of oil, for example. Over time, there will be a shift from the valuation of oil, for example, based on supply. It will start to transition over to being demand being the dominating factor. When that happens, then I do think that energy will begin to go on the upside.
Are you worried about the possible rising of U.S. rig counts and OPEC output discussions?
Not as much the discussions as the actual. I think that we're seeing the politicization of the price of oil based on what the perception is going to happen. I think we have to get through next week's meeting before we really know what's going to happen with regard to supply. So yes, I am concerned, and again, all of this really returns us who are involved with the energy sector to being more active from the commodity perspective as opposed to the fundamentals of individual companies.
Now, of course, we know that the presidential debate is happening this morning, and this is the third round that both Secretary Clinton as well as Donald Trump is facing off with each other. Now, you have made comments on how a Donald Trump win could perhaps boost markets, but because of, if we believe the polls, that is, his popularity continues to tank. Do you think markets will still get a boost post-election?
Well, I am disappointed in the way our political process has transitioned into valuing the real future based on the economy, et cetera, to what has happened. And I'll be very happy when it's over, regardless of who wins. The markets will definitely get a boost post-election, one way or the other, due to the elimination of uncertainty. There are signs now that voters are showing signs of tuning out to this year's election. In particular, the African Americans and the young voters who are showing a lot lower level of interest than they have in the past. So I think the uncertainty is going to continue, and I do think that once we get past it, regardless of the outcome, that I do think there'll be more of a positive outlook towards the future and more of a certainty about moving forward from an economic point of view.
Dodge, final question. Some of the news outlets are speculating that American firms will finally start to invest more post-election. Do you believe this kind of sentiment? And if so, where do you think they'll start investing, at least in the initial stages?
Yes, I do think, Abraham, that firms will become more confident in placing bets on the future. I think we will see it across the board. I don't think we'll see it in healthcare, for example, regardless. I think energy companies will begin to invest more in the future despite the short-term perception of supply versus demand. I also think that anything involved with retail, I think we will begin to see more positivity. I'm not sure it's going to be translated into higher prices of stocks until we get into January. But I do think that overall you will see a much more solid confidence in the future, and that will be good. That will transition from the political side of the business more to the economic.
Thanks, Dodge. Have a great week ahead. That was DodgeDorland, Chief Investment Officer at Landor&FuestCapitalManagers, calling from New York.
Thank you for listening to this podcast. To find more great interviews, go to bfm.my or find us on iTunes. BFM 89.9, the business station.
This year, I will chew 117 number 2 pencils.
I will doodle 9 Staples notebooks to death.
When it comes to school supplies, it's guaranteed your kids will go through a lot.
I'll make a whole lot of paper airplanes.
I will lose my backpack.
That's why you get guaranteed savings for back to school at Staples.
I'll give away my last pen to Nathan in math class.
Get guaranteed savings at Staples, and right now, 1 subject notebooks for just a penny with a $5 purchase. Staples, that was easy. Valid on select SKUs while supplies last. Limit 6. Ends 8/25/12.